been telling you over and over again lately that this market suddenly has a voracious appetite for value. So when companies that represent real value get tossed out during a hideous sell-off like we had today, I'll let the proverbial baby with the bathwater, you definitely want to circle back and think about buying them into weakness. That's why tonight I want to reintroduce you to a stealth value name, a value stock in the last place you'd ever think to look for one. I'm talking about First Solar, FSLR. That's right, First Solar, the once bubblicious solar power stock that traded up to more than 290 back before the Great Recession, now represents unquestionable value. Have I lost my mind? First Solar's rallied about 24% year-to-date. It's more than doubled, up around 158% over the last 12 months. But you know what? It is still only trading at 14.7 times next year's earnings estimates, cheaper than the average stock in the S&P 500. And more important, this is a very different company than the one that got put through the meat grinder years ago. First of all, this company is the best-of-breed player in the space. It's the lowest-cost commercial manufacturer of solar modules. It's also provided turnkey solar project solutions with everything from site development to engineering, planning, construction, operating management, and even financing. The key for First Solar, as I told you a few weeks ago, is the Analyst Day. Last year, the stock soared after the spring analyst presentation. Sure enough, when the latest Analyst Day rolled around just last month on March 19th, First Solar rallied 21% in a single session with some very positive news. I would not be discouraged by that spike. First Solar spiked after last year's Analyst Day, and the stock still went on to double since then. We've got some very encouraging numbers at this event. Management said the cost to make their solar modules should decline from 63 cents per watt last year down to 35 cents per watt in 2018. And they now have 10.6 gigawatt pipeline, which could be worth $15 billion of revenues through 2015. So those pipeline orders become part of the backlog. More important, First Solar gave bullish earnings guidance for 2015 and 16. Company thinks it can generate $25 per share of cash in 2016 fiscal year. Remember, this is only $67 share stock, even for today's pullback. Oh, and they talked about potentially spinning off a yieldco vehicle, like we've seen with many other renewable power names. I like what's happening here. Don't take it from me. Let's check in with Jim Hughes, CEO of First Solar, find out more about where his company's headed. Mr. Hughes, welcome back to Mad Money.
Thank you.
Have a seat. Thank you, Jim. I gave a prolonged background because I think a lot of people don't understand that the First Solar that we see is not an expensive stock when we go out a couple of years because of the way you've changed the way the company works.
Well, we've tried to transition the business over the last 2 years. There were a lot of changes in the solar industry. We went to a fully vertically integrated business model focused on providing the complete solution to our customer. That's allowed us to broaden the revenue base, allowed us to appeal to a larger number of customers, and we reinvested in our technology, and our technology's gotten dramatically better over the last several years.
Okay, well, let's talk about that, because there was a time when your predecessor came on the show and talked about how your CAD-TEL technology was cheaper than silicon. Silicon's come down tremendously, but it seems like that you guys have caught up and maybe are about to pass in terms of the power per cell, say, that you generate.
Yeah, the conversion efficiencies. So the ultimate entitlement of our material, CAD-TEL, is much higher than silicon. And we're now beginning to prove that, not only in the laboratory, but we're taking those research results and we're pushing those into our production modules. That's largely what got people excited on Analyst Day, is we're beginning to show off of the factory floor the same results that we showed a couple of years ago in the laboratory.
Okay, I'm going to read a quote and I want you to explain it to people because it really got me going. You said, earlier this year, we announced a truly amazing result, and those in the academic community who saw this result were fairly blown away. Under a year less time we told you we would take last year. We beat our previous world record by delivering a 20.4% research cell efficiency, third-party certified. What does that mean?
What that means is that we've come up with techniques and materials in our laboratories that will produce a research cell of that efficiency, which is a world record and shows the potential of the material. Now, when you take that research cell and you turn it into a full production module with the yields that you would normally get in production, it's not going to be that high.
Okay.
But we have made tremendous progress, and we basically committed to a roadmap that says within a few years we're going to be approaching 20% at the module level, which are efficiencies that 2 years ago no one would have thought about.
Does that mean that you're competitive against all the other fuels? I mean, without subsidies.
That's correct.
That's very significant.
It's very significant.
Okay.
You're beginning to see utility analysts write reports now where they talk about that we are competitive against
nat gas, against coal. It's working. Now, one of the things, we had David Cramer, my old friend from NRG, and he was talking about how the model is distributed and that the model that you guys have may be the old-fashioned model. Putting a panel on every roof might be where there's 50 million structures, he said. In this, you seem a little agnostic. You say that if people want to do that, they should have choice.
That's correct. The solar market's going to be a big market. We estimate over the next several years in excess of 50 gigawatts globally. yeah, the distributed market's going to be a huge piece of that, and we will at times sell into that market. But the utility scale business is, while it's the old-fashioned business, is still going to be a very large global business, and we will aggressively pursue that business. That's our core strength, our bread and butter.
Well, one of the things you made clear in the Analyst Day was that maybe you do it better than anybody else, so therefore you should retain some and then maybe spin off a growth vehicle that I think we all like. We saw NRG do YieldCo and it worked. Could you do a similar thing?
We could. We continue to study that as an opportunity. We haven't made a decision. If it looks like that would afford us a lower cost of capital and greater profitability on our projects, we would do it. But we continue. It's good for the industry whether we do it or not.
Okay, one of the things you keep highlighting in this was that you did this joint venture with GE. But I think our viewers who care passionately about GE would love to know exactly what that joint venture brought for you.
Well, we bought, GE was pursuing the same technology that we were, the CadTel technology. And they have a tremendous research staff and a tremendous research facility, and they'd put a lot of effort into research. They'd not committed to large-scale production.
Right.
They decided that it would be a positive, and we agreed to combine their research with our research and our production platform. And the combination is the roadmap that we outlined at our Analyst Day. And we think it's very exciting, and it's been a tremendous acquisition for us, and we continue to work on new market opportunities with GE, and we think it's been a great deal for them.
Okay, do you think we're in a world where we're going to begin to see, at least in our country, because it's warmer, say, than Germany, that's something that David Crane said, that we're just going to presume that the first course of action, if we're going to add any sort of power into the grid, is going to be solar, or is it always going to be that peak and not base?
What we will see over time is solar will broaden its penetration into the grid. The initial penetration will always be that peak. Over time, storage will become economic. That will allow us to penetrate further. We build what's called high AC-DC ratio plants today. That shoulders up the power. It allows us to penetrate even further. So as we move forward and as costs continue to come down and storage technologies advance, you'll see the penetration grow.
Well, one last question. Last year at the analyst meeting, you gave a projection, and you didn't meet that number, but you did say that you're not going to get away from that traditional quarter to quarter. The path you laid out, you feel really confident about that now? So when we have you back next year, you feel good? We feel very confident, and one of the things we tried to stress at our Analyst Day is we're going to present the same information next year that we presented this year, and we're going to hold ourselves accountable for the promises that we made. That's what we're looking for. Thank you to Jim Hughes, the CEO of First Solar. This is a very inexpensive stock, people, and usually don't find that in the solar space. It's David Cramer.